So everybody seems to be putting out predictions as to what's going to happen with the real estate market. Well, last week we heard from the folks at RE/MAX. It seems like they believe home prices in Canada will drop by 2.2% this fall. What does this mean for the Ottawa real estate market? Let's talk about it. Roch St-Georges, real estate broker here in Ottawa. I help families buy, sell, and invest in the real estate market. RE/MAX Canada reported that last week that they predict home sales in Canada will drop about 2.2% this fall. When looking at their estimates for the local Ottawa real estate market, they believe Ottawa sales prices will fall by about 2%, while the number of units sold will drop by 3%. We can see in the table sales from 2021 versus 2022. This data shows the number of sales up until August 31st. Sales are down 10.9% when compared with the same period in 2021, which is significant, but the drop in sales has been more important in the Niagara, Toronto, GTA, Barrie, and Muskoka regions. All of these have been, I've seen a number of sales drop by more than 30%. They expect the Ottawa real estate market to regain balance in 2023, although they say low inventory will continue to put upward pressure on prices. A survey by Léger, commissioned by RE/MAX, reveals that 44% of Canadians agree that rising interest rates are compelling them to hold on buying a property this fall, while 34% say they won't be holding off. Further, recession worries have forced 41% of Canadians to wait to purchase or sell their home in the fall of 2022. Elton Ash, who is the executive vice president of RE/MAX Canada, says, despite the fact that nearly half of Canadians are waiting to buy or sell a home, we're confident that as economic conditions improve by mid-2023, activity will resume. Timing the market for short-term investment is extremely difficult and rarely successful, but as a long-term investment, the Canadian housing market continues to yield solid returns. Of course, a home should first be a place where you live and shouldn't be an area where you're banking on making money. If you do end up making money from a purchase and then a sale, it could be greatly tied to when you actually purchased the property and when you actually ended up selling the property in that length of time and the economic conditions around it. Here's the aggregate composite of the MLS Home Price Index for Canada. This chart shows us that year-over-year percentage change of the home price index. Around January and February 2022, we can see we hit about 31%. This means at that time, the market was up around 31% year-over-year and has been correcting ever since and now stands at 6%. We will likely be seeing this continue to move down and into negative territory in the coming months as interest rates continue to rise. Let's keep this chart up and then add the MLS Home Price Index, benchmark price, for the same period. We can see that around March of 2009, the market was down about 9% when looking at the year-over-year percentage change. At the time, knowing prices were coming down may have seemed a little scary for those looking to get into the market, but in hindsight, when looking at the MLS Home Price Index benchmark price change, we can see that those who purchased during that time saw a very nice increase in their property values. You could focus on the thick black line labeled as composite in the graph. We can see this happen again around the spring of 2019. We saw negative year-over-year growth. In hindsight, this also appears to have been a good buying opportunity. A quote that I like to come back to from time to time is that of Warren Buffett, who once said that it is wise for investors to be fearful when others are greedy and to be greedy when others are fearful. Meaning, when everyone you knew was talking about buying a home, buying an investment property, or simply discussing how real estate was on a tear, this should have served as notice to perhaps reevaluate the real estate market and be a hint that things may have been getting overinflated and overbought. Now, Warren Buffett's quote can also be reversed by saying, be greedy when others are fearful, or simply look for buying opportunities when others are running away. I mentioned a few moments ago that home prices are currently correcting and that they could be likely moving into negative growth when looking at the year-over-year chart. Some may see this as an opportunity to purchase more real estate. We know the Canadian real estate market over the last decade has seen some amazing price growth, which was great for those who own real estate. However, history doesn't always repeat itself. We don't know how the housing market will be performing going forward with the current economic situation, the debt levels, the rising interest rates, and the political tensions in some parts of the world. This growth over the last 10 to 15 years can largely be attributed to favorable borrowing terms such as low interest rates, longer amortization periods, programs such as being able to buy with only a 5% down, HST rebates to some degree, and many more. We simply don't know what the future will bring going forward. If you are interested in taking risk by investing in the real estate market, you must be okay with the ups and downs that the sector will bring to you. This is also a friendly reminder, please, folks, to always live within your means. Don't try to keep up with the Jones next door. That's all. My name is Roch St-Georges. I'm a bilingual real estate broker here in Ottawa, helping families buy, sell, and invest in real estate. If you haven't already, please be sure to like and subscribe. That would mean a lot to me. If you are in the market and would like to discuss real estate, please feel free to reach out to me. You can do so at the number on the screen, 613-889-7732. Merci beaucoup. Au revoir. Bonne journée.